Intro. Welcome to Profit Insights, where we break down the latest happenings in the world of finance. I'm Dusty, here to guide you through a landscape full of numbers, trends, and insights. So grab your favorite cup of whatever keeps you going, and let's get started. Market Overview. What a Friday it was. October 24th, 2025, marked a milestone in U.S. equity markets as major indexes soared to record highs. Driven by softer-than-expected inflation data and strong corporate earnings, the S&P 500 advanced 0.8% to close at 6,791.69. The tech-heavy Nasdaq surged 1.1%, ending at 23,204.87, while the Dow Jones hit a new peak, climbing 1% and finishing above 47,000 for the first time at 47,207.12. Trading was a touch quieter than average, but the CBOE Volatility Index, or VIX, fell by 7%, signaling a decline in short-term market jitters. Key financial stories. The current rally marked an impressive streak, with major benchmarks up for 7 straight months. Leading the charge were technology, energy, and industrial sectors, though consumer staples lagged, showing less than 1% growth year-to-date. Even beyond the big tech names, companies like Ford, Albemarle, and General Dynamics made notable gains. On the data front, the U.S. Labor Department released encouraging inflation numbers. The Consumer Price Index showed a modest 3.0% year-over-year increase, falling just below expectations. This has reinforced hopes for an interest rate cut in the Fed's upcoming meeting. Futures traders are banking on a 25 basis point reduction and possibly another in December. Corporate earnings have been a beacon of positivity. About 87% of S&P 500 companies have surpassed analyst predictions. Standouts include Ford, which saw shares jump over 12% after a booming quarter, and IBM, enjoying a near 8% rise on better-than-expected results. Intel's strength in the semiconductor market also lifted spirits across U.S. and Asian markets. Switching gears to commodities, oil remains stable, with Brent crude near $65 per barrel. While geopolitical concerns have stirred some price swings, profit-taking has provided a counterbalance. On the flip side, gold seems set to break its winning streak, trading around the $4,118 mark per ounce. Now, let's talk macro. The U.S. government shutdown is entering its 24th day, stalling key economic data releases and leaving investors leaning heavily on the September CPI as a major inflation indicator. In a related vein, consumer confidence has dipped due to ongoing inflationary concerns. Around the globe, markets followed a similar optimistic tone. Asia-Pacific equities rallied, backed by robust U.S. and China dialogues. Meanwhile, in Europe, a slight profit-taking sent the Stoxx 600 down, although the UK market bucked the trend with positive retail sales figures. Important talks between U.S. and Chinese officials on October 25th could set the stage for easing trade tensions. As these discussions unfold, they may well influence next week's economic landscape. Investment tips. Looking forward, brace yourselves for a significant week packed with earnings reports from tech giants including Microsoft, Apple, and Amazon, as well as from Dow stalwarts like Boeing and Visa. Watch for any signals from the Fed's meeting on October 28th through 29th, especially in terms of rate cuts. These could play a vital role in shaping year-end market strategies. As you navigate these developments, stay keenly aware of how earnings outcomes, monetary policies, and international negotiations might influence your investment decisions. Remember, a well-rounded perspective can prove invaluable in these ever-shifting times. Sign off. And that wraps up today's episode of Profit Insights. Thanks for spending time with me as we decode the financial world. Until next time, when the dust settles, only the truth remains. Take care and invest wisely.